Welcome back to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm glad to have with me today Abraham Drost. He's the president and CEO and director of Carlisle Goldfields. Abraham is an experienced executive in the mining industry where he spent the past 25 years of his life. A complete bio of his can be viewed at our website. That is at this show's website at Voice America. You can also go to, and I'd highly encourage you to do exactly that. Go to carlislegold.com. The company's website is Carlisle Gold. That's CARLISLE gold.com. To pick up more on Abraham Drost's background as well as his management team. Carlisle Goldfields trades in Toronto under the symbol CGJ. You can buy it down here in the States, as I have, under the symbol CGJCF. 54.6 million shares outstanding, around 26 cents Canadian money earlier today, giving it a market cap of, I guess, around $14 million, only, despite the fact that the company has several million ounces of gold in the ground and is working diligently towards getting them out. Actually, I think even more important than the number of ounces in the ground is the fact that the company's prospects of getting those ounces out and doing so profitably is, I think, greatly enhanced by its recent arrangement with Aurico Gold Inc., a joint venture partner that currently has a 25% interest in the project. So welcome, Abraham. It's really good to have you with me once again.
Well, thank you, Jay. It's great to be here.
You know, your gold mining project, you were telling me before we came on, Mike, at least all of the deposits that you have number something north of 5 million ounces, I think, which is quite impressive for a company with a market cap of $14 million. But it's my understanding that your project, the one that you're focused on at least, is in the Lynn Lake Gold Camp in Lynn Lake, Manitoba. But I guess those are 5 deposits, I believe, the total number of ounces. But you're really focused on, I think, 2 basic deposits, which you are now advancing as one project. Those 2 deposits, if I'm correct, is McClellan and the Farley Lake deposits. What can you tell our listeners about the size and grades of those deposits?
Oh, well, thanks, Jay. Great intro. And, the Farley Lake and McClellan deposits are 2 out of 5 assets, 5 gold deposits that are actually contained on the ground that's 75% owned now by Carlisle and 25% owned by our joint venture partner, Aurico. And Aurico really looked at all the results and said, the Farley Lake and McClellan deposits are the 2 most advanced, about 1.7 million ounces measured and indicated. Pit constrained. They were, open pittable resources based on a preliminary economic assessment done by an independent engineering group that Carlisle had done. And it was on the strength of that particular resource and that the mine plan shown in the preliminary assessment that they jumped into a joint venture with us and have committed to carry us through a feasibility study by spending $20 million within 3 years on a fully permitted feasibility study. And I think part of what attracted them, Jay, was the grade of these 2 deposits. Farley Lake by itself is a 700,000 ounce situation, grading over 3 grams gold per ton. That's open pittable. Mm-hmm. We say pit constrained in the business. And then in addition to that, another nearby deposit called McClellan, where there's 1 million ounces pit constrained, making up a 1.7 million ounce deposit. Interestingly enough, below the pit constraint or below the modeled pit, McClellan has another 1 million ounces of underground resources. So, this is a project that obviously Aurico saw some significant potential in, and sufficient enough that they entered into a long-term commitment to bring the thing through development and into production.
Is there any chance of expanding the dimensions of that pit with higher gold prices? That's one question. The next one is, any chance of expanding it through drilling and exploration?
Yes. Yes on both counts. We used a very conservative, a reasonably conservative gold price of $1,100 US to do all the modeling at Inland Lake on these 2 assets. And so quite frankly, if the operating gold price at the time where a construction decision is made is significantly higher, I think you'd see the mine plan change. I think you'd see the pits expand to reflect that. And certainly along strike, we do have about 30 other gold occurrences in the belt, both in the Lynn Lake belt proper. And interestingly enough, Aurico had the vision to suggest that there should be a special exploration effort outside the feasibility area, so that Carlisle, as a funded partner, could focus on adding ounces and upgrading historical gold occurrences into something that might ultimately make feasibility. So we are working on a $4 million exploration program this year, in addition to $9 million going into feasibility, which is part of a $20 million overall feasibility effort.
All right. So as I understand it, you just in fact put out a press release just recently. I can't remember exactly what day it was, in which you discussed assays from that were from drill holes outside of the feasibility area, that the area that you're studying now are moving towards a feasibility study, I guess. Is that right?
That's right, Jay.
And that is that to expand the McClellan or the Farley Lake deposits?
No, any expansion right now and all the infill drilling that's taking place at McClellan and Farley would be under the mandate of the feasibility study.
Okay.
And so the separate $4 million exploration budget, which we operate on, and Carlisle is the official operator, and it's half funded by Aurico over and above feasibility. The results we posted last week, which you mentioned, are for what we call the special exploration effort outside the feasibility area, and they were quite good. They were quite promising. And
you say that's half funded by Aurico and half funded by yourselves?
Yeah. So in addition to the $20 million a year, the $20 million feasibility study commitment that was made by Aurico, they said over and above that, we'll ante up to an additional $2 million a year to be matched by Carlisle per year going forward. So, the total spend here is by Aurico is upwards of $26 million. We saw that right away as a very significant commitment.
Mm-hmm. So Aurico will, as I understand it, will gain they will gain 60% of the project, leaving you with 40 if they take it through feasibility. Is that right?
That's correct, Jay. They have to deliver us effectively what's called a compliant feasibility. In other words, compliant with all securities regulations and all mining and licensing and environmental permitting requirements.
There was a PEA that was completed, a preliminary economic assessment was completed. I can't remember exactly what the date of that was. When was that done, and what were the results of it?
Yeah, so that was posted to CDAR, which is the Canadian Securities website under Carlisle's name, in April of 2014. I had joined the company as CEO in February of 2014, and I'd actually invested in the company prior to that, essentially just looking at it as an investment opportunity. Became friendly with the management team and was invited to come aboard as CEO after I left Premier Royalty, which we sold to Sandstorm. I saw this asset, these series of assets, and this opportunity as just a very deep value situation, significantly undervalued, and quite frankly, I think Aurico's entry price of 52 cents a share, the stock's currently trading at 26, is kind of a reflection of the gold markets, which you alluded to earlier in your broadcast.
Let me understand then, with this exploration that's going outside of the feasibility study area.
Sure.
What is your relationship then with Aurico on that?
Okay, well, essentially part of the deal was, so the deal we did with Aurico in November of 2014 was to enter into a private placement at 52 cents and the opportunity for them to enter into a joint venture and earn-in agreement, which we've been discussing. And so they bought shares, 19.9% of the company at 52 cents a share, and then they made that $20 million commitment that we alluded to.
Okay.
Yeah.
What sort of recoveries are they expecting to get? What did the preliminary economic assessment suggest in terms of metallurgical recoveries for gold?
Sure.
Is there more work going forward on that as you go through feasibility?
Well, yes, there is. We posted I just encourage your listeners. You've mentioned the website. There's the most recent press release regarding exploration results. There was an April 28 release regarding a feasibility update, and I can assure you, metallurgy is one of the key foci, shall we say, in that feasibility study. But the beauty of it is both Farley Lake and McClellan, these two high-grade assets, are both past producers. So we have a very good sense of what the recoveries were and what they will be going forward. And at Farley Lake, they're about 94%.
I know it's too early yet in the bankable feasibility. We'll give a harder number, but any sense of what sort of capital costs might be in store down the road? Any wide range, or are you just not at liberty perhaps to speculate on that now?
Well, there is a number that's public as part of the PEA, and that is kind of the working number that we're using at the moment, is 185 million U.S., and based on that kind of upfront capital cost, the project returns a 34% internal rate of return using the $1,100 gold price. So, so we're pretty comfortable with that number.
Yeah. All right. So the drill holes that you just came up with, so they do give you some hope of perhaps outlining another viable deposit, I guess.
Yeah, that in my comments in the press release, I alluded to that because I said, we've got a number of these historical gold occurrences that, the company was never properly funded to follow up, and now it is. And, and we had some results that, certainly, were, sort of in the, the 20-gram range, which shows, again, the potential for high-grade shoots. And, the two deposits that I mentioned up to the north in the feasibility study, the McClellan and Farley Lake, they're a high-grade situation. The other deposits that we have on the property are down in what we call the southern belt, which is the area we're currently exploring, and they're about a gram lower. They're about 1.2 grams to the ton, whereas, into the north it's about 2.2 grams through the mill. And, we saw, so the mandate really is to see if we can find high-grade shoots within that lower-grade corridor to upgrade the potential to bring those assets into feasibility. And the early indications are that, look, there's high-grade out there, and you need to have a sustained exploration effort to go and find it. And, we have that commitment now with our partner. And the early indications are positive, and we'll be, we're about, I would say, roughly $1 million into a $4 million exploration budget this year. And just to compare, Aurico is about $3.5 million into a $9 million feasibility spend. So lots of news flow to come.
So we've you spent $1 million. So of the four, so we should be expecting ongoing results, I suppose, over the next several months?
Yes, absolutely. We're busy. It's all hands on deck at the moment, Jay.
And so those would be some drivers to look for. Anything else that investors should keep their eyes on? News and events coming forward
sure.
that people.
Well, you know what? Again, I'll refer your listeners to our corporate presentation, which is on the website at carlislegold.com. It's right on the homepage. There's a timeline in there that is the engineering Gantt chart that was provided to us by our partner, and that shows a little bit about what's coming. And by Q3 of 2016, they will have finished the feasibility work, and so we will have a very good idea at that point. Certainly what we're facing in terms of ultimate capital costs and, kind of a validated economic model, feasibility ready, and more importantly, where we're dealing with measured and indicated mineral resources today, we'll be dealing with mineable reserves at that point, and we see that as a potential revaluation of the company. So, at 26 cents a share, which values our ounces somewhere in the sort of the $10 to $14 range, a re-rating. I mean, we see companies at the M&I level today, trading in sort of the $100 range. If you use the precedents, we think there's a significant value opportunity here at these price levels.
Yeah, and the good thing is you shouldn't need to be raising a lot of money in the meantime and diluting shareholder interest until you have a substantially higher share price. At least that would be my hope as a shareholder.
Yes. Well, in fact, we're well funded. We have about $8 million in the bank, and so we're funded to meet all our exploration commitments, and in reasonable shape here. I mean, our objective here, quite frankly, is to be a junior partner on the ultimate development at Lynn Lake. And if Aurico, who recently announced a merger with Alamos Gold, who have the Mexican producing interests, and are looking at bringing the Canadian assets into the fold. Our sense is, look, if they're willing to build it and operate it, we'd love to be a junior partner on something like that.
Yeah, indeed. Anything else you can tell us? We're just about out of time. Anything else you think that you would like to highlight for our listeners?
Well, I think we've touched on all the highlights here, Jay. I mean, but from my perspective, look, still as an early investor in the deal, I'm still very encouraged that we're headed in the right direction, and I think there's lots more to come out of this project. And here's the beauty of it: we don't need higher gold prices to have significant returns at Lynn Lake, Manitoba.
Well, I guess with $1,100 as a very conservative estimate or a very conservative number to work off of, that seems to be good. And of course, a little bit of tailwind wouldn't hurt either, would it?
Well, you know what? I've been, as you mentioned, I've been in the business for a while now, and I've been involved with several different deals. And these hiatuses are quite typical, these downdrafts. But as I like to say, I've been through 4 downturns in the industry. But the reality is that means in between we were in fairly significant updrafts as well. And I don't think this time will be any different.
Absolutely. I couldn't agree with you more. Thank you very much, Abraham, for being with us, and look forward to keeping up with your story in the future. Thank you so much for being with us, and until the next time, take care.
Okay, Jay, thank you. It was great to chat. Bye-bye.